A lot of Australian data coming out at the minute, so how's the nation down under doing? I'm joined today by Chief Market Strategist with IG Markets, Chris Weston, to find out. Yesterday, Chris, we saw the release of the RBA meeting minutes, where according to Governor Glenn Stevens, an interest rate cut is possible, but evidence of further economic weakness will not automatically trigger one. What is the RBA waiting for in terms of its next move?
Well, we've got the capex cliff coming through. We know there's a number of companies which are cutting back, and we've seen that in the Q2 capex data. So that's only going to continue getting worse, I think, and I think that's what people are really quite concerned with. If you look at the data we've seen today from the CPI, this was the possible trigger for the RBA to look to ease policy. Now, what we've actually seen from the trim mean number, if you look at the weighted number as well, and certainly from all the sort of core underlying measurements, is that the RBA are fairly happy with where things are at the moment. Glenn Stevens has spoken today, and I think that's the right situation. I think the markets are fairly sanguine in their pricing of rate cuts going forward. I think they're pricing about a 69% chance of a rate cut by year end. What are they waiting for? Well, I think they want to see what's happening now with the data going into Q3. If there's going to be a cut, it will probably be around that September meeting. And I think the market pricing seems about fair at the moment. People are getting quite concerned with what's been happening with Canada and New Zealand, and those guys have obviously been cutting rates. We'll see the RBNZ cut rates tomorrow by 25 basis points, and everyone's been saying, well, the same thematics are playing through in Australia. We should have the RBA looking to ease and pick up that consumer confidence, which is going the opposite way of business confidence. So I think the Q3 data is going to be key now. Are we going to see some of these inflationary pressures abate? And will that force the RBA's hand, who of course have been saying that the new neutral range is a lot lower than it has been over the past.
And of course, as you mentioned, Australian CPI data is out today, below forecasts in Q2. But as you say, no one seems too worried. Are we seeing any market reaction?
Well, we did see a bit of a sell-off afterwards, to be honest. I think the one you want to be looking at there is the trimmed mean estimate, which is the underlying measure which the RBA looks at very, very closely, and that ticked up 10 basis points to 2.2%. So that's still very much in a happy place for the RBA. The RBA themselves. Glenn Stevens' speech in Sydney today, he came out at 1:30 Sydney time. He basically shielded all ideas and said, look, that a rate cut is on the cards. There's no doubt about that. But I think he used that as a mechanism to try and curb any further strength in the Australian dollar. I think he's fairly happy with the trend that we're seeing. Unlike the RBNZ and the Bank of Canada, he's pretty happy with the Federal Reserve doing the heavy lifting to bring the currency down, the Bank of England to lift rates at some stage and look at the Aussie dollar from a trade-weighted perspective. But I think they're just very happy with the way things are going. If they need to act, they will act. But at the moment, they're sitting pretty. I think he's in a very, very comfortable space in terms of what's happening in inflation. As I say, with 2.2%, if you look at headline inflation, it's still below where they would like it to be, but I think it's in tune with what they said in their statement of monetary policy earlier in the year. So I think they're sitting pretty ready, knowing that they still have 200 basis points of rate cuts that they can play around with if they need to. There obviously are other policy issues that they can do on the macro-prudential side. As I say, and just reiterate my statement, that I think Glenn Stevens is pretty happy with the way things are going at the moment.
So as you say, he's pretty happy with the way things are going, but it can't all be good news. Are there any potential headwinds the RBA should be keeping an eye out for?
Well, I think it's capital expenditure, to be honest, and the capex data. And the capex data, if you look at the planned data for going forward, we've seen revisions lower. Specifically, the mining sector, we know capex has just dropped off significantly. I don't think that's going to shock anyone. But the capex in the service sectors obviously is decreasing as well, and that's something that is of a concern to them. We know that the mining boom is over. We know that's happening with what's happening in the terms of trade and iron ore and coal. But it's the service sector that isn't responding as well. So businesses just aren't providing the levels of spending activity or the future planned spending activities as the RBA had hoped. And of course, we're transferring our economy, and we've got this transmission from mining-led growth to service-led growth. And if you look at the planned spending numbers, they're just not where the RBA needs them to be. They've cut rates by I think 10 or 11 times now since 2011, and we're actually seeing consumer confidence actually lower than where we were when we first started cutting rates. it's not responding to monetary policy as they would intend. So they, I think that they're going to keep their eyes on this capex data, and they're going to keep their eyes on inflation. I think they're the two key things. If they don't respond, and in fact if they continue this trend lower, then I believe that the RBA will probably have to look to cut again in the future.
That's all from Chris and myself for now. Thanks for tuning in, and for more market insight and analysis, remember to keep clicking back to Dukascopy TV.